On January 1st, 2026, China made a decision that almost nobody noticed. While most of the world was busy celebrating New Year's Day, Beijing quietly flipped a switch that could reshape the global silver market. Without headlines or hype, the Chinese government rolled out new export rules for silver. From that moment on, only 44 companies across the entire country were permitted to export silver overseas. That number used to be in the hundreds. For decades, small and mid-sized refiners had been supplying silver to the global market. Overnight, most of them were cut off. If you think this was just another regulatory tweak or routine government paperwork, you're missing the bigger picture. This wasn't housekeeping. This was strategy. What China did wasn't about compliance. It was about control. And by the time the rest of the world fully understands what's happening, the damage may already be done. But welcome back. And if this is your first time here, subscribe now, because what I'm about to break down is barely being discussed in mainstream financial media. You'll hear commentators say China is simply organizing its domestic industry. They'll blame environmental rules or quality standards, but that explanation doesn't hold up when you look at the facts. What you're about to see reveals why silver is no longer just a precious metal. It's a strategic weapon, and China just chambered around. By the end of this video, you'll understand what China is doing, why it's doing it, how the plan is unfolding, and what this means for silver prices, and for your ability to even get your hands on physical silver in the future. I'll also walk you through the 3-step blueprint that proves this move wasn't random, it was coordinated. And it's been years in the making. First, let's understand why silver is so important to China. It's not just for jewelry or silverware. Silver is a critical industrial metal. It's in your smartphone, your laptop, and the solar panels that are powering the green energy revolution. China is the world's largest producer of solar panels, electric vehicles, and countless other electronics. They need a massive, uninterrupted supply of silver to maintain their manufacturing dominance. For years, China was a major exporter of silver, but as their own industrial needs exploded, that dynamic started to flip. They began consuming more silver than they produced, becoming a net importer. So, what's the first step in securing a strategic resource? Control the domestic supply. By slashing the number of exporters from hundreds down to just 44, Beijing isn't just tidying up, they are consolidating control. They're ensuring that every ounce of silver produced within their borders is accounted for and can be directed to where it's needed most, their own factories. This move effectively creates a strategic reserve of silver, not in a vault, but within their industrial supply chain. It's a brilliant way to hoard the metal in plain sight. They're not stockpiling bars, they're building products. And this is just the first piece of the puzzle. Now, for the second step in China's blueprint, dominate the global supply chain. It's not enough to just control what's inside your borders. To truly have a stranglehold on a resource, you need to influence the global flow, and China has been doing exactly that, quietly and methodically. Chinese companies, often with state backing, have been on a global shopping spree. They've been buying up silver mines and investing in mining operations all over the world, from South America to Africa. They're securing future supply at the source. Think of it like this. If you can't produce enough of something yourself, you buy the factories that make it. China is applying this logic to silver mining. By owning the mines, they control the output long before it ever hits the open market. This allows them to divert that silver directly back to China, bypassing traditional markets like London and New York. This two-pronged approach, locking down domestic supply and buying up foreign sources, is creating a powerful pincer movement on the global silver market. While the West is focused on paper contracts and financial derivatives, China is focused on securing the physical metal. They're playing chess while everyone else is playing checkers. This brings us to the third and most crucial step of the plan, weaponizing the resource. What happens when one country has immense control over a commodity that the entire world needs? They get to set the terms. By restricting exports and controlling a growing share of global mine production, China is positioning itself to dictate not just the price of silver, but its availability. Imagine a scenario where a geopolitical dispute arises. China could simply tighten the tap on silver exports even further, causing a massive supply shock to the global tech and green energy industries. Companies in the US, Europe, and Japan would find themselves scrambling for a metal they desperately need for their products. This isn't just a hypothetical. We've seen this playbook before with rare earth elements. China used its dominance in that market as a geopolitical lever. Now, they are setting up the same infrastructure for silver. This export consolidation is the final piece of the puzzle, signaling that the hoarding phase is over and the control phase has begun. The quiet decision made on New Year's Day wasn't a minor policy change. It was a declaration that silver is now a strategic asset, and China holds the keys. So what does this all mean for you? The implications are huge. First, expect continued upward pressure on silver prices. As China soaks up more and more of the global supply, the amount available for everyone else shrinks. Basic economics tells us that when supply is constrained and demand is high, prices go up. We're not talking about a small bump. We're talking about a potential structural repricing of the metal. Second, and perhaps more importantly, is the issue of physical availability. In the future, it might not be a question of how much silver costs, but whether you can even get it. As supply chains get rerouted directly to China, the physical metal available for investors and smaller industrial users in the West could become scarce. This Chinese strategy is a clear signal that the era of cheap, abundant silver may be coming to an end. It underscores the importance of owning the physical asset, not just a paper claim. The game has changed. China is no longer just a participant in the silver market. They are aiming to become the market maker. Understanding this shift is the first step in navigating the volatile but opportunity-rich road ahead. Have you ever wondered what would happen if one country gained control over a critical global resource? Well, it might be happening right now, and the resource isn't oil or gold. It's silver, and most people haven't noticed. Let's break down exactly what's going on, because this could change everything. On January 1st, 2026, China's Ministry of Commerce introduced new licensing rules for silver exports. The official story? It's all about ensuring environmental and quality standards. Sounds perfectly fine, right? But when you look at the numbers, a much more dramatic picture emerges. Before these new rules, China had over 300 small and medium-sized silver refiners shipping their products internationally. Think silver bars, industrial silver, the works. After January 1st, that number plummeted to just 44. That's a staggering 85% drop in the number of companies allowed to export silver from China. And who are these 44 remaining firms? They aren't your local family-owned businesses. They are huge, state-owned or state-affiliated corporations. This is the crucial point. China isn't the world's biggest silver miner. Countries like Mexico and Peru pull more from the ground. But where China completely dominates is in refining. It's estimated that China controls a massive 60 to 70% of the entire world's refined silver capacity. For years, they've been the planet's central hub, importing raw silver ore and scrap, purifying it, then exporting high-grade silver back out to global markets. That global pipeline has now been squeezed. The flow of silver hasn't stopped, but it has been drastically reduced. For the very first time, China holds the power to effectively decide which countries get silver and which ones are left out in the cold. To understand the scale of this, imagine if Saudi Arabia suddenly announced that only a handful of its state-run companies could export oil. The global markets would go into a frenzy, prices would skyrocket, governments would be in full-blown panic mode. Well, that is essentially what has just happened with silver. But it is flying under the radar because most of the world does not yet grasp its deep dependency on China's refining industry. But they will, and likely very soon. Now, this is just phase one of a much larger strategy. Restricting exports is only half the story. The other, equally important half, is accumulation. While China has been tightening the tap on silver leaving the country, it has also been aggressively stockpiling it. The import data tells a clear story. Back in 2020, China imported around 90 million ounces of silver. Fast forward to 2024, and that figure has soared to 145 million ounces. That's a 61% increase in just 4 years. And here is the single most important detail in all of this. China is now importing significantly more silver than it exports. Just let that sink in for a moment. The world's largest refiner, which historically supplied silver to everyone else, is now a net accumulator. They are taking in more than they are letting out. This isn't just a market fluctuation, it's a deliberate, strategic shift. For years, analysts have debated whether China was building a strategic silver reserve, much like its famous gold reserves. Well, the debate is over. The evidence is right here in the trade numbers. China is systematically cornering the physical silver market. So why are they doing this? Why silver? Because silver isn't just a precious metal for jewelry or coins. It is one of the most critical industrial commodities on the planet. It's in everything. Your smartphone, your laptop, solar panels, electric vehicles, medical equipment, and advanced defense systems. Silver has the highest electrical and thermal conductivity of any metal, making it absolutely irreplaceable in modern technology. The green energy revolution and the AI boom are completely dependent on a steady supply of silver. By controlling the refined silver supply, China gains incredible leverage over nearly every major industry in the world. Think about the geopolitical implications. If a trade dispute arises, China could simply slow down silver exports to a rival nation, crippling their high-tech manufacturing sector. It's a powerful economic weapon, far more subtle than military action, but just as effective. They are positioning themselves to be the gatekeepers of 20. What does this mean for you? Well, the most immediate effect will likely be on the price. Basic economics tells us that when supply is restricted and demand remains high or grows, prices must go up. We're not just talking about a small jump. We could be on the verge of a historic price surge as industries scramble to secure the silver they need to operate. For investors, this presents a unique situation. But for consumers and businesses, it means the cost of almost all electronics and green technology could be about to rise significantly. This move by China is a masterclass in economic strategy. It was quiet, it was methodical, and its full impact is only just beginning to be felt. The world is about to get a very stark lesson in the importance of supply chains and the strategic value of a metal many have taken for granted. The silver story is no longer about speculation. It's about a calculated shift in global power. Keep a close eye on this, because what happens next will affect us all. Did you know the country that refines most of the world's silver has suddenly become a net importer? And that silver isn't being sold. It's staying right there, inside China. It's going into domestic stockpiles, state reserves, and of course, their priority industries. We're talking solar panels, electric vehicles, 5G, and even future 6G infrastructure, semiconductors, and military technology. China isn't shipping silver out anymore. It's locking it down, all while prices remain artificially low. Which brings us to a shocking date, January 31st, 2026. On that single day, silver collapsed 31%. It crashed from around $108 an ounce to under $69. It was the worst silver crash in nearly half a century. At the same time, gold dropped 11%. Trillions were wiped off the precious metals market in an instant. The official story? Overheated speculation, margin calls, and forced liquidations. Now, all of that is true, but it's an incomplete picture. So ask yourself this. Who actually benefits from a massive 31% silver crash? Well, short sellers for one, and massive buyers looking to accumulate physical silver at a huge discount. China fits that second category perfectly. Now, I don't have direct proof of Chinese state purchases on that exact day. Those records aren't public, but the circumstantial evidence is incredibly hard to ignore. While the paper prices on the COMEX exchange collapsed, physical silver premiums in Asia stayed stubbornly high. In Shanghai and Hong Kong, silver was trading $20 to $50 above the spot price. The physical market simply didn't believe the paper price. That tells us someone with enormous buying power was soaking up all the available supply during the panic. And in Asia, that usually points to state-backed entities. Now let's look at the third and most revealing piece of the puzzle. On January 21st, 2026, just 10 days before the crash, Chinese state media published an article labeling silver not as a commodity or a precious metal, but as a strategic resource. That specific wording matters. It's the exact same language China used back in 2010 before restricting its rare earth exports. You might remember what happened then. China controlled nearly the entire rare earth supply. They restricted exports, prices exploded, and rare earths became a powerful geopolitical weapon. It looks like history is repeating itself, but this time with silver. It's the same playbook. Control the refining, limit the exports, stockpile the supply, and then use that as leverage on the world stage. The brilliance of this strategy is that most people don't think of silver this way. They see it as jewelry, coins, or maybe a small investment hedge. China sees it as the backbone of modern civilization. Every single solar panel requires silver, and China dominates global solar manufacturing. Electric vehicles need silver in every system, and China is the world's largest EV market. 5G networks, semiconductors, AI hardware, military platforms, they all depend on silver. And unlike consumer products, military demand is completely indifferent to price. China's domestic demand for silver is exploding, so they made a clear decision: China comes first. Well, that's what the January 1st export restrictions were really about. And here's the masterstroke. By restricting supply while prices are suppressed, China can accumulate even more silver at bargain basement levels. Can I prove China caused the January crash? No. Can I show you why the timing, the structure, and the beneficiaries make it look highly suspicious? Absolutely. The crash was driven by the paper market, not the physical one. It required a massive seller to start the domino effect. China, as a net importer, benefits immensely from lower prices. And it all happened exactly 1 month after their export restrictions began. Is that a coincidence or a calculated strategy? Given China's track record, assuming it's a coincidence would be naive. So what does this mean for the rest of the world? It means there's no quick fix. You can't just replace 70% of global refining capacity overnight. New refineries take years and billions of dollars to build. And even then, the raw silver ore still needs to be refined, often in China. This gives Beijing incredible leverage over the entire supply chain. We're already seeing the effects. Dealers in Europe and North America are reporting longer delays, rising premiums, and limited availability of certain silver products. This isn't just a theory anymore. It's happening right now. Eventually, the paper market will have to face physical reality. And when that happens, prices don't just rise gradually, they reprice violently. With dozens of paper claims for every single ounce of real physical silver, a supply squeeze could send prices multiples higher. So here's the bottom line. China just executed a coordinated 3-part strategy that gives it unprecedented influence over the global silver market. This isn't speculation, it's policy. And it perfectly mirrors what China did with rare earths. Only this time, the stakes are higher because silver is far more essential to our modern world. If you own physical silver, this shift is a major tailwind. If you don't, availability will likely get worse, not better. This isn't financial advice, it's a reality check. Pay close attention to what the world's second largest economy is doing because China isn't guessing. They're positioning for the future. Thanks for watching. Subscribe, share this video, and let me know in the comments. Is this a brilliant strategy, or am I reading too much into it? I read every single comment. See you next time.